Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Okay, so here's what I'm like sleeping, right? And I'm thinking about, I don't remember the exact details of what it was, but it was like I was gonna go and do something and I was like considering like how embarrassed I would have to be because of how I had to be dressed at the thing that I was gonna go do. And I'm thinking like, this is just stupid. Like, why would I this, and then all of a sudden, oh, I'm sleeping. Okay, well, wait. I feel like really super rested. I must be sleeping in. I wake up. It's 6:30. What the fuck? Yeah, so once again, my alarm clock has failed. I thought that it had gone away. But no. My alarm clock failed me, so I missed the non-farms payroll. That's okay. I wasn't planning on taking a trade off of it anyways. But so we come in here and the forecast was 450K and we got 199K. Then the unemployment rate ticked down from 4.1 to 3.9. That's interesting. So this is really How is the non-farms payroll 199? I really thought they were going to be more like 500. But I mean, the previous, it was 200. So the first question is, why do the forecasts keep getting it so wrong? But it looks like that the treasury market is more interested in the unemployment rate going down. So which kind of means that the reason the unemployment rate is going down is that there's still like people are just dropping out of the labor force, right? That's got to be it, right? So that means that the Federal Reserve is more likely to continue tapering, but there still appears to be a problem, like that people don't want to work or whatever the deal is. That's super interesting. And I see here on Twitter, the March hike probability jumps to 90% from 80%. So that they seem to be reading that right. It is interesting to me how lately the treasury market has cared so much more about the survey number than it has the actual jobs number. There's very much inconsistencies between the two surveys. Let's see what Mohammed El-Arain says. Overall, a report that is somewhere between confusing and pointing to supply issues. Yes, it is. But do those supply issues imply more inflation? I'm not sure, but I think that this is one that we need to continue to sit back on, yeah? Well, I really want to know what the fuck is going on with my alarm clock. I thought that maybe it was like, it's blocking, somehow it's blocking notifications. Well, I do have a lot of notifications. Hmm. Oh, geez. No, Gus, you shouldn't be getting that. Let's see here. Let's figure out what's going on with you here, Gus, because I thought I fixed that. Oh, I swear I changed it. There. I guess maybe I didn't. Yeah, let's come in here into YouTube and fix that. Make sure. What is your opinion about cut and reverse? It's something you should do a few times. Super effing hard, I tell you that. Probably a better one to try on the oil market, right? Well, should we? So let's see here. Gold took a hit, came back down. 6J actually moving up here, kind of contrary to what this is doing. Bitcoin taking a hit. Oil, costing itself fairly okay. Hmm. Yeah, the ES got cut pretty hard too. But I mean, so the initial move that we're getting, what is the ES or this increases the possibility of a March rate cut, and ergo it's bad for stocks. That's kind of been the knee-jerk reaction to freaking everything, frankly. It's just, you know what I mean? Hmm. Hmm. What stocks are on your radar today? Well, I don't normally talk about stocks, but we should think about it. So we're probably going to continue to see that. I think one of the big things that's been going on in the market that not a lot of retail traders have been hearing about, but is turning into a really big force, is that European stocks are doing well compared to U.S. stocks because they are better. There's more of them that are favorable to the duration that we're moving to. So probably these big cap techs are going to continue to get hammered. But let's just see here. Maybe and I'm having problems with my data feed, but maybe we see maybe these things come back a little bit before the open and the market changes its mind about a few things. I don't know. Because Europe is better, I know. They're not as leveraged, essentially. European indexes have a greater share of shorter duration and rate sensitive sectors in the index. That's the way that Goldman Sachs put it. Here's the Blade Runner on Twitter saying non-farms payroll gives further evidence the economy is being hampered by mandates, lockdowns. The Federal Reserve will have to take a dovish unroll. I don't know, man. Is that what it is? Because if people aren't getting jobs because of lockdowns, would that mean the unemployment rate would decline? I don't know. I'm thinking here. I'm gonna have to. You know what? We're gonna analyze this until the top of the hour, and then I need to go and get some food. Yeah, I was expecting a whopper of it. I was expecting there to be a pretty high amount of time. Now, I guess here's one thing that we should really keep in mind here. Okay, I don't know if this payroll report is actually the important one. If in February we get the same thing, in February and March, because we got February and March before, I think that the tapering is like it's going to happen. Okay, but all this stuff about raising rates and rolling the balance sheet off and all that sort of stuff, I'm not so sure anymore. With everyone bulled up on the December jobs print, which was expected to more than double the disappointing November jobs print of 210 to 447, with a whisper of more than 500K. Moments ago, the BLS reported that the December's jobs market deteriorated again, as only 199 jobs were added, a huge miss to expectation and the lowest number since December of 2020. This was the second consecutive month of big misses in the establishment survey relative to expectations. Yeah. As expected, the November payrolls data was revised higher, but not nearly as much as some had expected, rising just 39K from 210 to 249. At the same time, non-farm payroll employment for October was revised up by 102 from 546 to 648. And the change for November was revised up 39 from 210 to 249. With these revisions, employment in October and November combined is 141,000 higher than previously reported. Still, this does not explain why the current month continues to print disappointingly lower than expected. However, in a carbon copy of last month's schism between the household and establishment survey in December, the former once again showed solid gains, with the number of unemployed workers rising by a whopping 651K to 155 million, and with the number of unemployed sliding by almost 500,000 from 602 million to 6.319 million. The unemployment number once again slumped sharply, dropping from just 3.9% from 4.2%, and below the consensus estimate of 4.1%, even as Black unemployment gained notably. Okay, so now that one right there. So if we're saying, or if we're concerned that it's lockdowns that are that are happening here, Black unemployment going up, would be a real concern there, because that would be telling you that, yeah, people aren't able to get jobs because of lockdowns. Hold on a second. But lower jobs should result in more difficulty. Well, kind of. You would think, right? The problem here, Air Cages, is that the big thing that has prevented the Federal Reserve from tightening earlier, and I think there is really an argument that they should have at least been reducing their purchases of short-term debts a long time ago, was the unemployment rate. And they were saying we need to get to full employment first, not full unemployment. We need everybody unemployed, and then we can no. No, we need the unemployment rate to improve. And so when this comes out and the unemployment rate moves, the market reads that. So it's been the last few months a different kind of non-farms reaction to non-farms has been a little bit different. They have been paying it more attention to the household survey than they have been the actual number of jobs created in the payrolls. Now, what is causing this? Well, one argument is that the new jobs are being created, but you're not seeing them in payrolls. It's like more people are being self-employed than small businesses that don't have payrolls or that don't use those companies, right? That's one thing. But then the other thing is maybe they're just dropping out of the job market. Like they're people that they have a spouse that works and makes a lot of money, and since they're having lockdowns and nobody's allowed to go outside the house and whatnot, they don't really need the extra money anyways, and so they just don't work. And since they're not actively searching, then they no longer show up in the household survey as such, and so the unemployment rate goes down even though we're not creating very many jobs, right? That's what I think the market seems to think is happening. And here, again, the black unemployment gained in this last survey suggests that could be happening, because that's going to be more like service jobs and so forth. And Zian is going for another little dip here. Can you believe it? So if I had kept all of my contracts on, I think that we would be at like 10,000 now. But the Seth CTA fund, remember, the Seth CTA fund is supposed to start with $100,000. So if we're up 8% on the year, pretty good. We don't have to chase performance here. So I only want to keep one contract on. I don't think that this is a place where I want to like add contracts. So I'm just gonna chill and let them do their thing. At the same time, labor force participation rate was flat at 61.9, once again failing to recover much of its post-COVID losses. Here is a lovely little chart here. Okay, there are people that are just not working. This makes sense to me. Like, right? I mean, I don't think that this really gives you the demographics of it, but it seems to me that like if you're a woman and you were working just so that you had more play money and whatnot, that you just see no reason to work right now. And so it's people that don't have to work but were working, they're deciding not to work now, right? Looking at wage growth, oh dear. Okay, I didn't even look at that one. Wage growth, average hourly earnings rose 4.7%. Well, down from the upward revised 5.1% year over year, it was well above the 4.2% expected. What was the month over month change? Average earnings month over month, expectations spot 4, actual spot 6. Okay. Fed's Dally speaks at in an hour. What else do we got? Oh man, there's a bunch of Fed speakers today. Ooh, okay. This could get weird. This could get weird. Hmm. Well, the whole thing here is to me at the moment looking at this, okay, like the Federal Reserve is not stupid. They're looking at these numbers too, and they kind of have to wonder as well. I do think that probably we still have to raise rates. I don't know if we have to do it in March or June, but I do feel like we need to normalize the interest rate and that we need to get, like at least 2 rate hikes in there. But they'll be speaking at 10 o'clock Eastern time. The Fed speakers will be start at 10 o'clock Eastern time, and then there's a bunch after that. But it really makes you wonder about, this whole, because some people are saying that they're going to raise interest rates like 4 times and then 2 rates a year and all that sort of stuff. This kind of says maybe not. This kind of says maybe Omicron is having a bigger impact than we thought. And again, like the real impact of Omicron isn't going to show up in the survey yet. So February report could be really bad, but it is going to come down to the February and March reports, right? If these February and March reports come out and the unemployment rate rises again, then I don't know if it's going to happen. So that's why I'm not so giddy up. Let's just short this thing. I'm seeing like a knee-jerk reaction that is correct just based off of the numbers. But the more that we dive into it, I think, you know what I think actually could be happening here in the treasuries? Oh, actually, this is a really good. Okay, so I think that something that may be happening here in the treasuries is the risk premium is increasing. They are flattening. Because the 6J actually saw a little bit of a rise there, even though all of the treasuries got clobbered. And gold held its bid too. Like they got hit pretty hard. Well, they're down from yesterday too, by the way. I mean, they're below that 1800, but I'm actually thinking, I'm thinking that if I was going to make a bet here at this exact moment, I'm not going to because I was late and this is just going to be a messy market. So I'm not sure that this is kind of risks that I want to take on. But I'm thinking, do you want to buy gold? Because what I'm seeing here, I think it seems to be in line with inflation rising. The treasuries might be a little bit of a mess here. As equities might be a little bit of a mess. But if the risk premium is rising here, what they're saying is that the uncertainty in treasuries is rising, and so you get a higher rate, even though maybe they're not so into it. We were watching at 2x, says Gus. Yeah, I fixed it. It went away, right? You didn't have any more problem. I'm sorry about that. I really thought that I went in and changed it, but That should be the last time, though. That's the one thing, is that I would sometimes forget to renew everybody's licenses, and that system just wasn't working very well. So going over to a system where you just pay one time, I think is a better idea. We'll see how it works. I haven't, it's the beginning of the month and everything, and so I haven't had anybody try the new eBay system or PayPal system. Not yet. Now, on the treasuries, let's just assume that this move on treasuries keeps going. Well, let's see. First of all, I closed that window, right? Yeah. So here's non-farms. Let's mark it. Drawing tools event. So there's non-farms. It's well below any kind of levels we're looking at. But we could come to a daily chart. Nope, that's not it. Daily ZN. Okay. So at 127.28. So still quite a ways to go, but that's where we run into, at least from a technical standpoint, some really serious resistance. I'm going to look at ES. Here you can see there was a little bit of a rise overnight, and then we got this dump here. So it's possible that the ES just stays in this range. They could try and test yesterday's low, though. I mean, yesterday's test of those lows weren't like super crazy or anything. So I think that's a very much something we could try trading here, possibly. How are your settings in the footprint chart? I hardly ever use that footprint chart. I should probably look at it more often. But what I do is I aggregate it so that in ES it's 4 prices are one print, right? And that's basically the main thing that I'm interested in. And I like to see, like, when you get like you see like 20Ks down in here at multiple prices, it's usually a buy the dip sort of a thing. That's the one thing that I kind of look at for it. So I need to go eat something, but I don't know what I want to eat. I guess we probably have another one of those banana nut muffins. Those are good. I need to stop eating. I had lasagna last night. I need to just stop eating that because I don't think that my body likes tomatoes. Vorax live tweets Euro USD traders don't know what to do. No. I don't think that that's it at all. Probably Euro USD. Well, okay, they're all over the place actually, but I'm thinking that here it's like, well, the dollar, this makes the dollar weaker, but then you're going to want, because there's going to be more money going to go to Europe, but then there's probably some people a little bit scared. So I think what we should see through the day is the dollar weaken below 96 spot. We'll just see, because there could be another side to the trade. But, and again, just note that Bitcoin took another little haircut here. So they're having to push through it. There's definitely dip buyers down there, but You don't like Ninja Trader's footprint? Yeah. Yeah, I think I pretty much every major indicator package out there in Ninja Trader, I've at least looked at it once. I have to say, I really feel like there's a lot of vendors out there promoting stuff in Ninja Trader, um, asking $1,000 for stuff that you really shouldn't be paying that much for. That there's just cheaper ways to get them. Okay, so I guess we're getting a muffin. Be back. Is this a safe time to go big with Bitcoin shorts? Well, I'm not sure, to be honest with you. But you probably already missed your best chances, right? Right? Your best chances was to go short MSTR, or to buy puts on MSTR back when they were up at 816. Now they're at 549. We gotta go back 5 years. There's maybe a little bit of support around 450. You could do it. I'm sure that there are probably some puts way down there that are cheap, but the issue I have is I'm not sure that the plunge below 38K or so is going to be so dramatic or not. Like, it seems like a lot of the Bitcoin community are kind of anticipating it, that they all want to see it happen and buy the dip, right? So if that is what happens, it would kind of be like, how do I show this? Yeah, okay. Oh, I haven't posted on Patreon this week, but we're gonna have to do that today. I totally forget about that one. I wish the way that Patreon worked that you could automate it. Oh my gosh, I've been doing it for so long. I have so many folders, so many charts and stuff. Oh yeah, I haven't done it this year yet, in fact. Okay. Okay. So if you recall, last time around in 2017, you kind of had these initial bounces, and then you got this thing where it was like, are they going to hold 16K or whatever? And it finally broke, and then it bounced back up pretty quickly. It's probably, this is a little bit better of an example. It's like, because of the tether manipulation, you're probably gonna get this bubble pop here, right? Is just like, if you're gonna take the trade, I don't know, maybe you could do it with a leveraged position in Bitcoin, but you're gonna want to take your profits quickly. I think, like, there's still upside risk here. I don't know. At the same time, I do think that this move down in the treasuries is hurting Bitcoin, and that as such, Bitcoin might have more selling pressure than they expect, than the manipulators expect, and so I don't know. It could be more persistent than we think. I don't know. If MSTR was still doing really well, I would have been like, yeah, let's go for it. But because I think that that's the best way to short. You got banned from YouTube. What? How did you get banned? Oh, Salim got banned from YouTube. That totally makes sense. You hacker, you. Were you out harassing other people? Good insight. I'll flip a coin. Yeah. You can tell I'm not really I'm not really, this is not really a space where I'm like really so here's the thing is if you take a bet here and you end up being right, you're probably going to be rewarded for it because what I'm seeing here, it seems to me that the risk premium is increasing. By the way, we're seeing gold making a run here. So the one trade that I did say maybe would be worth doing, buying gold, seems to be doing okay. What I'm seeing is that the amount of uncertainty in this market is increasing substantially. So I'm not as sure about, certain big question trades. I'm not as sure how they're going to turn out. A lot of the things that we've been doing for the past 6 months were like no brainers. Like the market didn't seem to be pricing them incorrectly, but it was almost a guarantee that these things were going to happen. Now, all of a sudden, they've just thrown a lot of uncertainty back into it. So, um, maybe if you were going to do in Bitcoin, and I'm not sure how you would do this, but maybe the play that you want to make is to just bet on increased volatility somehow, right? Like they may drop and then go back up, but either way, like the daily range of Bitcoin is may increase from here. Okay, let's take a few bites. Biden due to speak at 8:45 my time, 10:45 Eastern time. We should tweet. We should tweet about how the risk premium is increasing. Are prop trading firms overrated? I think that calling combines prop trading firms is stupid. I think that's marketing to make you feel professional about what you're doing, but they're bucket shops. Seriously. This just comes back to this one thing. Like one of the things that really irks me, to be honest. Like I didn't think that it irked me, but over the last week or two, I've been seeing this stuff, and I saw somebody. There was a YouTube conversation about something, and now it really starts to irk me. Calling it professional. You want to learn to trade like a professional trader, guys. That means that you need to take it seriously, that you need to, you need to do this, and you need to buy my subscription service, or you need to follow my YouTube channel where I do professional trading. Guys, if you are a retail trader, don't call yourself a professional. Seriously. What we do in retail trading is nothing, absolutely nothing like professional trading. What about prop trading firms like SMB Capital and Axia Futures? Well, I don't know much about SMB Futures. About SMB, I mean they don't say much, so we can't really say anything. But Axia is pretty good. They have education. I don't really know a whole lot about it because I haven't taken their courses, but from what people show me, it seems like it's okay. It seems like they do okay. They have some traders over there that do make some big money from time to time. They're not like perfect by any means, but it sounds like they do make money. When you were saying prop trading firms, I thought you were talking about, the funded trader programs. Futex. Well, Futex is basically Axia, right? All of the best traders from Futex left and went and started Axia is what happened. I don't know. I don't feel that a prop trading firms are really the same thing that they were like 20 years ago. That's the thing. In fact, to be honest with you, I think that prop trading as it existed 20 years ago is dead. I don't think that it really works that way anymore. Prop trading got killed by robots. Robots killed prop trading, and what we've got instead is prop speculating, right? Like it's super hard to find an edge market making these days. It can be done, but super hard. And most of what's going on is actually speculation. You can make money speculating, though. That's what we do, right? Well, that initial move was a buy. At least volume-wise it was. But very curious, that open in ES, not quite what I would have expected. We should note that the treasuries did come back a a ton. So I don't know if that's just a bounce or if somebody is coming in and trying to take the more nuanced take that we've been talking about here. Either way, either way, TNX going up. Well, yeah. So the 10-year yields increased. Yeah. But they've pulled back a little bit. I'm not so sure that I want to be involved in that. You notice here in my CTA strategy sort of a deal, I could have added contracts again if I really wanted to, but I didn't, because like you're going to get this down move. We've already been awfully bearish in treasuries, right? Can we really sustain a move above 1.8? I'm not so sure that we can, because I think the highest we can get before March is 2%. So you kind of have to game it out over 2 months. Kind of downside is limited at the moment, I think. But then on top of all of that, like, it's just like, this report is really bizarre. Last report was really bizarre. Something's going on here that I don't think that the market seems to understand, or at least that the people doing these reports and everything understand. It's not, because I don't think that the report is giving us the complete picture, right? And I think that that's probably why the treasuries came back here a little bit. So probably don't want to be getting directly involved in a trade in the treasuries there, unless I think that I have a spot where I can get like 10 ticks or something like that. I still think that the better trade at the moment is going to be in gold. Like, if I was going to speculate here, I think that the information that we're getting right now is, on one hand, it kind of suggests that we should be concerned for the economy, but on the other hand, it also suggests that there are still some inflationary pressures on the horizon potentially. So I think that buying gold at least back up to 1800 makes a lot of sense. But we'll see. That asset sure has been a tough ride, hasn't it? Being in metals. Yeah, I think that being in commodity sectors, I think, is like in investing wise, I'm still long rates and long like materials and metals and stuff. So there's here we're getting a little bit of a pullback for oil, right? Oil taking the 80 handle and coming back a little bit, you know. We might get a little bit more bearishness come into oil potentially, and that might give us a good opportunity to buy some more oil. I don't know. We'll see. Where is it? It's still, is it still higher than yesterday? Let's see here. No, not quite. It's basically a little bit below now. In fact, 80 was higher than yesterday, but now 79 is not. But we'll see here. S&P 500 had a little bit of an initial bull, and now they're testing the downside. We'll see if the index decides to fall apart here, or if they try to do the unexpected here. Hoping for a bounce to sell some crypto. Oh, yeah. I think your chance to sell crypto was a long time ago. unfortunately. Listen, I tried to tell everybody, especially on TikTok, way back in November, like, I don't think you want to be invested in cryptocurrency right now. I never like made like a straight up like, dude, this is where it's gonna go to, and yeah, all that sort of. I just said there's a lot of really big risks in December, and you know what? Nobody listened. Even now, when I'm right, I'm like, there's big moves in December, all of this other stuff. They all just kind of ignore it. It's just hilarious. Like they all make fun of you, and then when you're right, they just kind of forget what happened. No, it's a tough job, but somebody's got to do it, folks. No, I'm saying I'm not telling people to buy or sell anything because that's irresponsible. I wish I could just make like the really big, give people financial advice. No, all I'm saying is there's still significant risks in cryptocurrencies, especially as rates are rising. Something happens and this flips around and the interest rates completely back off, and the market decides that they're not going to raise rates in March, then maybe Bitcoin could get a reprieve. But I don't know if that's going to happen. I just hope housing prices go down a little. I don't want the so the thing with the housing prices is like if housing prices make a move, it could be a big move and it could be a problem, right? Like if housing prices come down, I don't know if they're going to come down a little, you know what I mean? You know what I mean? Probably though, in the current environment, the housing prices are probably going to be okay. Yeah, because building material costs are still high. See my play here. If I think that treasures are going to come up more, and it is possible that they retrace back to the non-farms number, which would put us somewhere around 19. I always want to be at least one contract short here, so I'm as small as I can get right now. So, because I'm thinking there might be some bit of bounce. What's Ian Shepherdson saying here? Talking about the non-farms, he says, I've been doing this long enough to know you can't win them all, but this one is really bugging me. It just doesn't sit right. If payrolls had risen steadily at the pre-COVID pace since the pandemic began, they'd now be 8.8 million higher than the December print. Very low unemployment rate is misleading. Millions of people have left the labor force in the denominator. I am never going to forecast payrolls again until next month. Dude, this guy. Oh, man. I suppose if I were Donald Trump, I would call it a triumph. But probably, yeah. The unemployment. You know what? This is gonna be funny. Let's see what. In an hour. It's about an hour. Biden is gonna speak here. Is he gonna try and trumpet this report like, "Yay, the unemployment rate went down and everything's great. You should vote for me." You can. I think that's what he's gonna do. Oh, what? No, Scott. Okay, so there's this kind of like joke been running around where somebody says that they got denied from a job because in the interview they said that they got lowballed, and they said, well, we do that so that we do this so people won't apply just for the money. After which you replied, what money? And that's a joke. And so this person is saying, oh, that was my rejection letter from Goldman Sachs. No. Sorry. You apply for the money. That's what they want, my friend. Let me tell you what. Okay. Now, your salary will be lower than other places because they give you huge bonuses. Bonuses is a significant portion of your compensation at Goldman Sachs. But no, this is not like them at all. There's 75 comments on this. Let's go read it. Let's go see what they're saying. Is like, nah. I wish I could like participate there, but it's just not like what they're like at all. Yeah, it's funny. Biden's gonna blame the unvaccinated? No, he's not. I don't think that's what he's gonna do. I think he's gonna say it was a good report. That's what he's gonna do. He's gonna say it's a good report. He'll be like, this report, look, the unemployment rate just really, really fell, and things are just going absolutely great, guys. This is great. I don't know why you all hate me, because this economy is just roaring, and we're doing awesome. And then a reporter is going to be like, okay, but why is it that they missed the total jobs numbers created, and this was the lowest jobs created since the pandemic? What's with that? And he's just gonna go blank. I'll just go completely blank. That's what's gonna happen. We will see. That's my prediction. We'll see. See, Live Squawk says U.S. December's jobs report more positive than headline suggests. I'm maybe not. I'm just kind of looking at this. Well, the S&P 500, they jumped there. That's good. Hey, maybe it's not so bad. Maybe it's not so bad. Hey, can we get oil to jump back up there to 82? And you can go and buy gold here while you're at it. Nah, I don't know if I'll really want to get involved in ES today here. I don't know. Like 95 isn't a terrible spot, but you still got that 47 above us, right? So it's kind of a price I don't want to mess with. Because it's Friday, there's going to be tons of gamma set up there, right? So, even though this isn't like an options expiration week, but there's always those weekly ones, right? Nah. I think for me, probably the best thing to do. Oh yeah, you know what, Eric Cages is. Thank you for reminding me about that. Because I need to go and look and see what they're doing. So GameStop is building an NFT marketplace for video game NFTs, supposedly. Trending tickers GameStop is number one, up 14% to 150. Well, that's actually not as big of a rise as I was hoping for. Maybe they go higher though. Maybe they get to 160 today. I don't know. I think that NFTs are ugly cartoons marketed to virgins. I think that when I see NFTs and I see discussion about NFTs, I just see a bunch of clueless people saying things that aren't true. Like, I don't know who sold them on it. I really think that all of these, because a bunch of gaming influencers, okay, like so two in particular, okay, I should ask him. Harris Heller, and who's the other guy? Why can't I even remember his name? Oh, I feel so bad because I love him. I really do, but can't remember the name. Devin Nash. Yes. Okay. Both Harris Heller is all of a sudden talking about, I should make some NFTs. Okay, whatever. They're in the music business, whatever. Okay. Devin Nash is like made this video like you're probably gonna buy NFTs in games in the next year or two, whatever. It's like, where's this coming from all of a sudden? And again, it seems like there's a dedicated PR effort in the cryptocurrency space right now. I don't know where that's coming from, but it kind of feels like that they're advertising because they need more money coming in the market. But then here's the line that I hear is they're like, well, it'd be great because haven't you ever bought something in a game and then that game goes offline and so you can't use that thing anymore? And it's like, well, that's not quite how it works because the thing doesn't get stored on the blockchain. The only thing that gets stored on the blockchain is the record that you bought it, right? So probably in the future, if a company goes kaput, you still won't be able to play it because their content servers will be down. Unless you build the content all into the game, everybody has it, and the token enables it for you. That's how you'd have to do it technically. But then if that was how you do it, it would be a lot easier to hack, right? People would just hack it. So I just see, but everybody seems to think that the NFT is on the block, that the picture is on the blockchain itself, and that's not what happens. Like on OpenSea, it's pointing to like Amazon Web Services, right? So, well, you might know. You know what I was thinking? So what I want to do for an NFT is I want to take the paper about the efficient market hypothesis and like do some funky colors to it and then mint that as an NFT. But then it's like, if you're using somebody else's study as the basis for your NFT, isn't that kind of, wouldn't they then try and put a claim to the profits that you made? So then I decided that wasn't such a good idea. But that's my NFT idea, is make an NFT called the efficient market hypothesis and sell it for like $2 million. Stop talking, you're making too much sense. It seems like it would be a great, probably you're too late on NFTs to catch a really big one, but maybe number go up. There you go. The treasuries here are coming back down again. Is the market now deciding that despite all of the confusion and everything that the non-farms was good and that they are surely going to raise rates in March? Here's a funny one. Forex Live says oil quickly falls $1, trades into negative territory on the day, and I'm looking at this like, well, they did drop off of the initial news, but they've been headed up the last 20 minutes. What you talking about, boy? You're late. You're late, Forex Live. This is choppy for sure. Yeah. Well, like if we had taken an equity trade when we were talking about it, and I said no, I don't want to do that. And I don't know if it's a good trade. It's basically been flat since then, huh? And the treasuries, they had a big rise up, and now they've had a big fall. We'll see if they make a higher low or a lower low or what they're going to do here on that side. Ted Cruz versus Tucker. That thing isn't interesting to me. Ted Cruz did step in it with the far right the other day. I don't know how big of a problem it is for him or not. Right, he called the protesters on January 6th terrorists, and then he said, "Well, I was using loose language. Listen, whoever said that pipe bomb, that's a terrorist." Curious that you don't ever hear anything about that. Why they're not finding that guy, but whatever. You're heading out for the weekend? That's a good idea. I want to head out for the weekend. But then what do I go and do? It's too cold outside, dude. It needs to warm up. You know what I'm doing this weekend, actually? I haven't told you guys about this. It's a big deal, actually. A really big deal. There's a couple of big deals going on in my life that I haven't said anything about. And I'm probably not going to tell you until like just before they happen. But this one, it's okay. It's not like there's any reason. It's just like I just don't care to make a big deal about my personal life, right? But both of our dogs are about to die. So we had the one dog. He is just so old. I've started to feel more sympathy to them. Okay. I've been trying to take good care of these dogs and be really gentle with them and make sure that they're happy and everything because their days are limited here. The one he's like old, like we'll take him outside and then he'll come back and he doesn't even stand in the right spot to get inside anymore. It's like he's blind and stuff. He's going blind, I think. And sometimes he'll just wander around the floor and like just stare into nothingness for a little bit. Like he's old. These are Yorkshire Terriers, okay? So we were like, he's on the chopping block. on the chopping block. Good grief. But we're sitting there like, we're probably going to have to put him to sleep maybe in the next year, right? Well, then the other dog, who is a little bit younger, quite a bit younger, but still old. Like he's like 18 and she's like 13. Okay. She's had this lump on her paw or on her arm, on her elbow that was there for a while and like it went away and now it's come back and so we were giving her antibiotics and it didn't do anything. So we're pretty sure that that's cancer. She's been limping around, but otherwise she seems to be acting just fine, although there are some signs like she's not eating and drinking as much and stuff. So she's gonna die too. So all of a sudden it's like both dogs are gonna die. Well, we didn't expect both of them to die, but we were expecting one of them that we would maybe have to put them down. So we went and we started looking for puppies. And somehow, I don't know, I guess I was just persistent enough. But I wanted to get a certain type of dog, so I went out and found a breeder, and it turned out that they were just having puppies just now. And they had them, so I told my wife about it, and she's like, okay, fine, we'll get that one. So I'm going to get a Papillon. You know what a Papillon is? So it's actually a kind of cocker. It's a kind of spaniel, actually. But they're a toy dog. They're teeny tiny dogs, and they have party colors like a collie does, and and their ears are like really big and bushy, and it looks like their ears look like a butterfly. That's why they call it a papillon, because that means butterfly in French. And I was the first person to contact the breeder, so they said like I have second pick, but other people want to know if they can get a boy or a girl, so we have to go down there and select which one we want, or at least decide whether we're going to get a boy or a girl. So we're going to get a Papillon, and I think that this may change the stream, because those dogs, they just weren't, I don't know. They won't come up and like sit with me, but I think that this dog will want to be with me while I'm streaming and sit. So maybe the dog will come and entertain you guys while we're on stream. French bulldogs? I'm not really into a lot of these breeds where it's like a French bulldog. Is it Frenchies? I think you have to do this with them too. That like you have to artificially inseminate them. Like they can't even breed normally anymore. It's really, some of these dog breeds have gotten really messed up. But so some of the dogs that my wife was talking about, they all had the flat noses, and I was like, no flat nose dogs. I don't like the look, and I don't think that it's ethical. Papillons, though, are a pretty healthy breed and energetic. That's the thing, is it makes me mad. Like the Yorkies, they just sit around all day. They just do things, and they're supposed to be good at like, that's what terriers are for, is like catching mice and stuff. Heck no, there was like a mouse in the yard, and they weren't interested in it at all. Like your whole purpose in life, you don't do anything. That's a false info? What? The flat nose is bad? No, well, like a bulldog, you definitely have to, but I'm pretty sure that French bulldogs are the same, although it's not as bad. French bulldogs are like one of the most popular breeds, though. I think that if you were like looking to make money, French bulldog probably one of your better ways to go. Although there are some dogs that, man, if you got a nice one, like you get a German Shepherd from Germany, those can get expensive. Or Mastiffs. Apparently a Mastiff is a sign of wealth in China. So there was like Mastiffs going for like millions of dollars. But this is going to be a tiny dog, and hopefully he's not too yippy, but So we're gonna go see the baby puppies tomorrow. You paid $10,000 for a purebred French bulldog? Wow. Yeah. See, there's there. Now, did you get breeding rights with them? You gonna have kids? They won't give us breeding rights for the Papillons. So I think there's only like 2 registered breeders for that here in Utah. So I could understand why they might want to keep their monopoly. A broadly acceptable take about January 6th on the MAGA right a year ago has become a politically incorrect take on the MAGA right now. Terrorism is terrorism, no matter who does it. Too bad the left doesn't share that sentiment. Attacking cops and storming the Capitol is stupid, reckless, and utterly self-defeating for anyone who believes the rule of law and Constitution. It is the opposite of MAGNA. Knock that shit off now. I agree. I think the reason it is a politically incorrect take now is because it appears that not everybody that was involved in that was, trying to commit terrorism. It looks like the majority of the people that went into the Capitol thought that it was okay for them to be there. And there was a few people that committed vandalism. There was a number of people that committed vandalism. People on the right think that those people that committed vandalism were agitators. And there was at least some agitators, like Antifa members. That we have seen proof that there was some Antifa people there. How big of that they were of that whole thing, I don't know. But I think that this kind of attacking Ted Cruz for language thing, I think it has more to do with that these guys never really trusted Ted Cruz, and they're looking for a reason to undermine him with the right than it does that he was really trying to say anything about it, ZB made a higher. They did come back up here, didn't they? They all made a higher low. The range, there's just I'm kind of keeping an eye on it because maybe I will take a trade in the 10-year, but the range they were trading and the prices and everything just aren't super attractive to me. And seeing that, like, the ES took off. It was looking really good at first, and they've kind of fizzled out too. So I'm not so interested in it. I need to eat this muffin, dude. Oh wow, breeding rights was 15,000. That's nuts, dude. So I still kind of I'm kind of looking at this. I'm seeing a tweet here saying that we should go and look at the Fed Watch thing, but it looks like market is now pricing in 4 rate hikes this year. When I'm done eating this muffin, let's go and look at the Fed Watch tool. But I'm not so sure that 4 rate hikes is right. I think that 2 makes sense this year, but there is a lot of evidence now. It doesn't say that we're going to be having a slowdown or that we're having a slowdown, but there's evidence that we should be concerned about it, that it's a risk, and it may be a deflationary risk. I'm not sure. It could be an inflationary one, but I sure hope not. Because can you imagine, like, dude, if that's what we're really going to go into, then we could run into an environment where they have to raise rates and the economy is doing bad, um, just because of inflation, and that could go on for a long time. So, they were saying that something like 50% of the Nasdaq stocks are down 40% from their all-time highs. Like that is rough. And then you're going to go into a period of maybe 2 or 3 years where are raising rates to fight inflation. And it's like a recessionary thing. Like seems awfully ugly. Yeah. And I kind of see that one is on the horizon. That kind of seems to be the way that the Fed is leaning right now. That's a little scary. But I'm also thinking that there could be some deflationary pressures from this Omicron thing. I don't know. And then who knows? Maybe another. I saw headlines about another variant. They're like, oh, it's just as virulent as Omicron and it evades the vaccine and it's really deadly. I'm like, oh my gosh. Seriously? We don't have the populace under control. We need another wave. You think Powell will reverse on rate hikes? I'm not so sure. So hold on a second. Yes, that's right. The Florona out of Israel. That's right. Was the other one that they were talking about. I don't know if it gets widespread or not, but that one's a concern too. And then there's also the Florona is something else actually. Isn't that one the combination of flu and COVID that you get them at the same time and it's really bad? Anyways, no. I think that there are 2 things going on here, maybe 3 things going on with the Federal Reserve. Okay. Point number 1 is that there is inflation. Okay. And they still kind of think that it's transitory, but clearly they kept their balance. They were, they kept up their asset purchases longer than they should have. They could have started doing that while Delta was going on. They'd be in a better spot. So they kind of already made a mistake. Okay. So they're behind the curve essentially, right? So they're behind the curve and we are getting real inflation. This too. But then something else happened because when we got those CPI prints, it was like all of a sudden the White House was concerned about it. I don't know what it was that it's really weird to me how the political establishment just 180'd on it so quickly. But what you have now is really both sides of the aisle saying we've got to fight inflation, right? It's just it completely flipped. So I'm wondering how much political pressure is there on the Federal Reserve? We want to think that they're independent, but I've seen a couple of things these days that kind of makes me think that the Federal Reserve chairman is kind of partial to trying to do what the president wants and help him accomplish his goals, And if the president is concerned about inflation, then they're putting it higher up on their list or something. So that's kind of a problem because if the people are going to be more concerned about inflation, that's what matters to our pocketbooks, right? Is the tax of inflation. So could that lead to them being hawkish for longer than they need to? That if there is a deflationary pressure that comes in, they won't react to it quickly enough and then over tighten and create a recession. And I think that has kind of been what a lot of people in December were trying to bet on. And then all of a sudden, they gave up when it really became clear that at the very least they probably are going to raise rates in March, right? But now that the market has fully priced that in, we get this non-farms that's super confusing, right? And ends up being another kind of hint that something's wrong because people aren't coming back into the labor force. Okay. Well, wouldn't surprise me. I'm thinking one of the things that I think I'm going to have on my list of expected flows next week. I don't think that you do it today because they already kind of made the move, and what we're seeing right now just kind of for the moment just looks like the water sloshing around. I don't know if they're making a contrary play. But on Monday, what we might see is interest rates rise as they try and make this bet. Now, it gets tough. It might not actually, maybe it won't be Monday because there is a CPI. I think that if you were going to put that bet on, you would want to do it before the CPI, right? So you wait for the CPI. If the CPI is tame and is lower than the previous month, suggesting that the inflationary pressures are abating, then maybe they put that on and we start pricing in that maybe it's not 4 rate hikes, maybe it's 2. And maybe they wait until June. Right? And if all of that happens, yeah, you might see a Powell reverse on rate hikes. But again, because of the political pressure and everything else, I kind of feel like that the Federal Reserve is just a little bit too slow. It's funny. I mean, like, the market overall has just been a little bit slow. I can't think of another time where I have felt so far ahead of the market. Like, I know what's going to happen, and then I have to wait a couple of weeks for everybody else to catch up and finally catch my trade. It's actually a little frustrating. You know? Well, it is what it is. The Lev has been spending a lot of time talking about the VAERS database. Hey, he's the guy you want talking about those sorts of things. He knows his stuff. Taleb is a smart guy. Okay, so GT350 says shit will hit the fan when Biden releases those 500 million COVID testing kits. So I think the theory here has been that people are saying is that when they put all of the testing kits out, everybody will use those tests and see that they have COVID and stay home, and that will be like a really bad thing. That's why government was like changing the guidelines to say, you know, if you're symptom free for 3 days, then you can go back to work or whatever. Because if the people waited the whole 10 days with the speed with which the variant was spreading, it would be like nobody would be at work. They'd all be homesick, and it would just decimate the economy, right? I think that we're past that now. Like, the Omicron variant has spread so far and wide already and is so quick that it's basically like this week and next week, and we're probably past the peak. So by the time that people get COVID testing kits, like, nobody will care anymore. It'll be like, I think that it'll be like nobody cares anymore. I really hope that after Omicron that so many people, because it used to be one of the arguments that I remember hearing very early on, especially during alpha, was, well, I don't know anybody that's had COVID. Do you? Are you sure that it's actually a thing? Are you sure that it's actually a thing? And it was kind of like, well, yeah, I haven't met, and I've heard of people that caught it and died, like older people in my area, but nobody that I actually know caught it until I caught it. Made me mad because it was the people that were claiming that were talking the most talk about it were the ones that ended up catching and spreading it to us. But it's not their fault. I hold no ill will towards catching corona. I'm happy that I caught. I did everything to not catch it, like especially during alpha. I just like did not leave my property except for to go to the store for like 3 months. We still caught it in December. So but now with Omicron, it's like everybody's catching it, dude. Like here where I live, the testing facility that you can go to had a line of cars almost a mile long. Crazy, right? Of course, I don't really hear anybody out here like panicking or anything else like that. But that's where I'm kind of like, by the time that people have the kits, they're not going to be afraid anymore. So I don't think that is going to have an economic impact the way that you're saying. The economic impact that you're going to get though is going to be in the things that we're already seeing right now, and that we kind of get a little bit of a hint of in the report. And not only that, but just like the recovery. Like I don't think that everything with this recovery is going to go exactly the way that people anticipate. And now that you're getting like, okay, COVID is turning into an endemic thing instead of an epidemic, and the economy recovers and we have to resolve all of these supply issues, I feel like there's this attitude that like all of the supply issues will ease and then everything will be hunky-dory again. And I just don't think that things tend to go that smooth. I think that there's going to be a lot of economic effects that we don't necessarily anticipate and become difficult to deal with, especially as it pertains to how ridiculously overvalued some portions of the stock market became. Because I don't know, I'm looking at some of these names, man. Like, again, like 40% of the NASDAQ is down. Like, a good portion of the stock market is basically in a recession, right? So if you're in some of those names, how long will it be until they see a new all-time high? Are they just going to recover? Delta's going to pass, and by the end of the year, they'll all be at new all-time highs? Possible. Or maybe they were all overvalued and now the interest rates are rising. You can't have that leverage and craziness anymore. And it's going to be like 10 years before these stocks even match their all-time highs. If that's the case, then we should just be selling those losers and be trying to catch into the next leg up of whatever it's going to be, right? I don't know. But I don't think that it's going to be quite so smooth. And this labor participation rate thing, as I think, are probably going to be one of the quintessential examples here. And maybe it's the case that even after Omicron is gone and everything else like that, that it's still that the labor participation rate is a little bit stubborn. I remember this happening after 2008, but I think this is different. I think this is, well, I've gone a year, 2 years without working. And yeah, we have less money. We can't go out and do things as much, but I don't care about going out and doing things as much. And I'm much happier staying home and trying to do my side hustle. And maybe you're just going to see more of that. That's not necessarily good for that's like good for the economy, but not necessarily good for stocks, right? Stocks want as many people working as possible to bring down the cost of labor. But if people, it's a smart thing. Like if people, especially women, start to stay home, then that's going to increase wages. That's going to increase wages. Now that you had it, you should have better immunity to future strains. Yes, that's true. I think that's true. or at least there's a good amount of evidence that suggests that's true. That there was some studies that showed that people who had natural immunity or natural immunity enhanced with the vaccines were less susceptible to the newer strains. And that is because when you become natural immunity, you're immune to more than just the spike protein. And so you're more likely to, because if the spike protein mutates, other parts might not mutate. And so you're more likely to have some immunity and catch up faster. But I don't know. It's a thing. Coronavirus is not going away. This is why whenever there's like a new, like Omicron, like I think that what we're doing here in the United States is probably okay. Okay. But like some places are like full lockdowns again and stuff, right? What these other countries are doing isn't sustainable, right? That at some point they're going to have to face the music. You can't stay shut down forever. Can't stay shut down forever. Google says it will begin to accept and run ads for sports betting from certified state licensed entities in New York from January 8th. I'm not looking forward to that. It's good for David Portnoy, though, huh? Boy, I tell you what, that guy's got to be swimming in it. Oh, yeah, another breaking news story that I'm seeing, not that it's particularly pertinent to stocks, but it's pertinent to the vaccine here. Citigroup to fire vaccine holdouts this month in strict U.S. mandate. You have to be vaccinated or you will be fired at Citigroup. Wow. Here comes stocks ready to test lows. Treasury is making another move up, so maybe they do get back to the news price. Let's see. Did you read the playbook? Not sure what you're talking about. Is that some new book? Is that a book that David Portnoy made or something? Oh, yeah, I think I know what you're talking about. I haven't read that, but I think that I've looked that book up at least once. It's an old book. And does it have empirical evidence in it? He's the owner of SMB Capital. Hmm. I don't know. Hey, if it has some empirical evidence in it, then I'd be willing to read. You have to prove to me it has empirical evidence in it. I don't know. I guess I'm more interested. Hold on, something's going on here. Okay. I think that move in the treasury was driven by this exchange. You know what? There's another one I said. Probably the dollar continues to get weaker, but it goes below 96, and it went right there. There's a holy grail for trading for sure. The technical analysis holy grail is impossible. Technical analysis is not a holy grail. It's a king of the hill game. And the longer you're sitting up there on the hill, the more everybody else tries to pull you down. I mean, yes, it was starting to look pretty bearish there, but they haven't gone and broken the low yet. Anyways, there's so many books and everything that purport that you're gonna, you follow this strategy and you do these things and you're gonna make money. And I'm just really tired of it. I tell you what, if you haven't read the Trades, Quotes, and Prices Markets Under the Microscope by Jean-Philippe Beauchamp, who is French, you really should, because once you've read that book, man, everything else that you've read in trading just seems so childish in comparison. Okay, because this is like real heavy, hardcore math, comparing it against the market's performance and conclusively showing that there are structural inefficiencies in markets. And then you go and not only that, but it also kind of like just tears apart. Once you realize the way that the market works, it really tears apart the vast majority of retail traders' ideas about how things work. So, Trades, Quotes, and Prices Markets Under the Microscope by Jean-Philippe Beauchamp. I think it's Stanford Press. We'll make a video about it. We're gonna have a talk about it in the next video, I think. I wrote this script for the market conditions one. I don't know if it quite turned out the way that I wanted it to, but I think we're gonna run with it. I think you guys will enjoy it. There's a lot of good information in there. And then we're gonna start talking about the stuff from that book. So, but again, I got to tell you, that book is so serious compared to anything else I've read about trading that it was like you just won't even want to bother with these other books. Like ever since I read that one, like I'll read the introductions and then just be like, well, this is going to be a waste of my time, because what they do is they prove it's like, okay, here's the thing that happens in the markets. Here's the math behind how it works. And here's the model that we built to try and model that behavior. And here's the comparison of that model up against the real world performance. And here's where that model was weak and where it was strong. And it's like everything we know. It's not just that. It's like, it's everything that we know. It's a summary. It's an excellent, I mean, it's not everything, but it's like the excellent summary introduction to market microstructure, right? There should be a college course called Market Microstructure that has, some statistical math stuff as a prerequisite. And that book is the textbook. Yep, that's it. That book is the textbook, right? Then you don't want to mess with anything else, right? And so I'm more interested in, hey, here's a piece of information that we've got. Like GT350 talking about shit will hit the fan when Biden releases those 500 million COVID testing kits. Although I disagree with him on the impact that they'll all have, that is 100% a piece of information that can affect the markets that not everybody will necessarily be paying attention to or thinking about that we could use in our trading. Those are the sorts of things that I'm interested in, man. I don't think that you need to be good at MATLAB or anything. There's a little bit of calculus in there, but I don't know. Anytime that you don't understand the math, you can just glaze over it. I think that one of the things I want to do this year is go back through that book and get myself to the point where I can derive all of those models by hand from memory is what I would like to do. I really want to be an expert on this because, again, the shift that I am making is, look, I don't have it all figured out. I have found some significant edges, and then sometimes I come in and I try and trade it and I still fail miserably. And it's like, well, I was doing everything right. I had the thing right and I just made a mistake. So maybe it's just me. Maybe just make mistakes. Maybe it's just that the market is still too random that even with all of that edge that it's really hard and you're still more likely to lose. I don't know. I don't have it all figured out. All I know is that there's this thing that I can see that from everything I know is monumentally important. The big banks, the real professionals seem to understand this stuff and nobody else is talking about it. That's the thing that I do know. And so I don't know what else I can give you beyond what were the videos that we have planned that's going to help you in trading, but we are moving towards something more important, right? Like we're trying to get you guys everything that we need to know to get people started in trading so that we can talk about the important issue that I want to trumpet, which is that markets are not efficient, are not informationally efficient. That's what we're about now. And that certainly helps in your trading. At least it will point you in a certain direction that I think is more productive. Whether you find something through that more productive avenue is going to be up to you, right? But this is something that people need to understand. And it's not just like we understand it. We need to understand the implications that this has for capitalism as a whole, because we don't. We tend to assume that the market is efficient, that it already knows everything, and that the market is always right. And that's not true. And that this is why markets have a tendency to run amok. And we need you guys, really. Maybe I don't completely ever figure it out, but maybe one of you guys will. And we need you guys to do it because we need to reduce that inefficiency, right? We need humans. We need real people that are researching and understand what is going on to make these calls and keep the market in line. We don't have those anymore, and it's a really important thing, you know. So what we're doing here now, it's all of a sudden it's gone from, well, I'm just trying to make money and I have my little group of friends here, to all of a sudden like we're doing something monumentally important to society, and we need to get our message out there and we need to work hard, right? And that means, for me, that means that I need to do better at trying to get videos out. I'm trying really hard. I got the day off today, so, and I did quite a bit of script writing last night. I think I'm going to review it again here in the morning. I'm going to go take a shower and then I'm going to review it again. And then I'll probably record it today. And have a video out for you on Monday. And then I don't know if we'll have another one the next week or not, but I'm trying to get more videos out, and I'm trying to get these ones out of the way really quickly. Because I need to do better, right? And you guys, you can really help, right? When those videos come out, make sure you watch the video, leave a comment. Did any of you guys leave a comment on our, is day trading right for you video? Not last night. It's called Successful Day Trader Traits. If you haven't left a comment on this video yet, well, I'll link it now, but I'll link it again when we are ending the stream. Would really appreciate it. You leave a comment there, start a conversation there. We need to work on the conversation on the channel. I don't know what it is that I do that we don't tend to get that conversation, but we need to get that conversation going. Because again, it used to just be like, well, whatever. You don't need to be popular. It's probably better that way. Yada, yada, yada. I'm focused on the trading. And that doesn't mean that I'm not focused on the trading or that I'm doing anything different with that. It's just that it's like, it used to be that if somebody wanted to go and look at a certain technical indicator, or there was a book that they really liked, and I was willing to go and find it and read the book and, trash it afterwards. Now, I don't have time for that because we have something more important to do. We need to teach the world that markets are inefficient. That markets are not informationally efficient. So we'll comment on it today. I mean, if you have any recommendations for like what I can do in the video that might make you want to comment on them more, I would really appreciate it. It's like when I look at all these other channels and they get so many comments, and a lot of them seem like really dumb. Hold on a second. Well, anyways, today might have been a good time to have made a video about the non-farms and everything, but if I was a full-time content creator, that's probably what I would do. Is I would make a video about non-farms and I would put it out, before the end of, around the time that everybody's getting off of work. And then that would be a sort of thing that everybody would want to comment on, what they think about the non-farms payroll, right? But like the video that we made about computer hardware, that got a lot of comments on it. I'm not sure why that one gets it or not. One of the videos that I think I need to make is I need to make a video just about monitors. I mean, I kind of covered it in that hardware video, but I think that if I made one just about monitors, that would probably do really well. It seems like talking about gear is something that more people on YouTube are searching for. You're going short ES? Oh, well, they did kind of reach the level there, didn't they? Although that's a little bit of a bounce. And that's happening as the yields just get crushed. Ooh. I mean, not the yields. The yields are soaring. The treasuries are just getting crushed here. Wowee. Isn't Biden supposed to be speaking here in a bit? Arizona has made education vouchers available if schools closed due to COVID. They should, yeah, that's a good idea. Look at that go. And let's reset things right to there. It looks like the 30-year may be kind of leading that charge. I don't know. That was pretty aggressive. And seemingly out of nowhere, huh? Well, I feel like I've been missing a lot of opportunity. I didn't really take very many trades this week, but I am more interested in playing like the inflation and everything next week. So I'm gonna keep my powder dry. Okay, well maybe we should go short. Well, like I only got 15 minutes before we should be shutting things down. I can go longer if we want to, but you guys get in a little quieter. We had a good stream today, though. You guys, we had some good conversation. I was trying to eat, and you guys kept saying good stuff for me to respond to. Even though I was super late, I got to figure out what the deal is with my phone. I think it has something to do with the number of notifications. So, is they gonna bounce there? I kind of am thinking maybe I could short 79. Damn, 79 to 780. The Fed quantitative tightening could become a real option in 2022. What is this from ChristopherBarraud.com? Well, this is... Okay, what's this say? The labor market is probably tighter than indicated by the unemployment rate. Most of indicators suggest that right now the labor market is probably tighter than indicated by the employment rate at 3.9% in December 2021. As a matter of fact, the excess of job offers compared to unemployed exceeded 3.7 million in November 2021. Over the same period, the quits rates in the private sector hit another record high, which implies that wages growth will keep accelerating in the coming months. Reuters highlighted that workers walking away from jobs in record numbers, particularly from lower paid and often frontline service sector positions where health risks are considered more acute and work from home options are less available. Okay, so I think the argument that he's making there is that even though the labor participation rate is poor, it doesn't matter for the Federal Reserve. Did you say you were in Utah? How is there? I've heard it's awful. Oh, you don't come to Utah. It's just you will hate living in Utah so much. Everybody just hates living here. It's a terrible place to live. You think they bought it? Transitory effects from Omicron wave will give employees more bargaining power in the short term. Okay, Dali is speaking. Inflation isn't fleeting as we once imagined, and neither is COVID. So he must be the reason why we got slammed down there. Where are you? Where are you at right now, GT? Price wage spiral is not yet in the statistics, but is worth keeping an eye out for. My company, they do, wages every year and you get an increase, and it's going to be super interesting. We have no clue what they're going to do yet, where they're leaning. Are they going to give everybody a 5% raise for inflation or what? It's It's a real conundrum. But I'm kind of worried that that's what's going to happen. I'm kind of worried that everybody is going to give their employees like a 5% rate raise and like really are going to get that price wage inflation spiral, which for me is probably a great thing, right? My house becomes an even smaller portion of my costs and my assets continue to appreciate. It's a good thing for me, right? But for the overall economy and for most people, that's not good. That could create a recession. Hmm. Well, longer run inflation expectations make me less worried about an upward inflation spiral than some others. Yeah. But aren't the longer run inflation expectations lower because everybody expects something bad to happen? Oh yeah, they're in Ontario. Oh, you need to go and visit John. Oh, we haven't heard from John in a while. That's because I would turn completely 100% anti-technical analysis, and I think he's still into it. Cat Turd commenting on the jobs numbers today. I agree that policy needs to change. I don't know, with the way that he's talking, I think you don't want to necessarily be long going into the comments from the Fed speaker. S&P 500's succumbing a little bit there. 46.65. I did say, well, I want to go short, but I'm not going to do it because we're going to end the stream here, and it's only been 5 minutes. Well, I don't know who this Christopher Barad guy is, but this article he posted was pretty darn good. Top forecaster of the U.S. economy from 2012 to 2020 and second place in 2021. Oh. He has... Oh, I am following him. I guess I've been on his website before because I'm following him on Twitter. What? The stock guy TV, I lost everything on NIL and now I'm losing my kids' college fund on CALX. I hate you. Man. Ouch. Dude, stocks have been brutal the last 6 months, really. Like the further on this goes, the more I realize the amount of pain that has been out there and everybody's just been hiding it. Nobody wanted to talk about it, and now that interest rates are rising, now that's all coming out. Oh, painful. But you know what? It serves you right for being an NIO. That was a disaster. I remember when everybody was involved in that. I was just like, You know, one of the things has been that there's been a lot of these stocks that I've been like, yeah, I don't think you really want to get involved in that necessarily, you know. But I don't sit down and say that. And then I regret not being more aggressive about it later. That's why I've really started to get aggressive about NFTs. I guess it doesn't really come up here on stream very much, but on TikTok it does. And I've made some pretty anti NFT videos on TikTok. In fact, I think I made one yesterday, and I think that somebody reported it because all you know, it only got shown to like 50 people, and then they stopped showing it to people, which was a little unusual. Uh, so I think that somebody must have reported it or something. Not oil stocks, they've been on fire. Oil has been on fire for sure. Actually, let's not call it on fire because oil being on fire is generally a bad thing, right? They've been doing well. They've been doing well. They have been yielding returns. Now, as the S&P 500 collapses here, there's another 10 points. Oil is getting dragged down with it, and so is gold. And so is Bitcoin. Oh, Bitcoin. We got to stick around for the Bitcoin, man. It might happen. It might happen any minute now. It may be happening in the next 10 minutes. They're at 4,500. Well, somebody just bought back up a little bit. I would just enjoy it so much.
Block sell.
Block sell. Ouch. Man. Somebody is puking hard here, man. Fed's tally, once COVID is gone, inflation pressure will almost certainly continue to be downward if you say so. Oh, it was so close over there in Bitcoin. I'm just gonna drag this chart over here for a little bit. Heck, why not? Sure. Oops. Gonna put it up here. Oops. Definitely don't want that. Get rid of that order column. And we'll come in and we'll make it super tiny. Super tiny. Oh, that's funny looking. Okay. Oh, man. Well, at the moment, it kind of looks like they're buying it, though. Okay, so we're going to need to change how often it snaps, huh? Auto center ticks. Let's see here. Oh, they've changed it in Bitcoin, huh? It's every 5. So every $50. Nah, let's do it like auto center every 30 ticks. Maybe I spoke too soon. I just would love to see a lovely little crash in Bitcoin below 40K. Where's Air Cages? Can you just come in and short it a couple $1,000,000 just for fun? Would appreciate it. Sacrifice your NFT for the cause. Well, you know what? The S&P 500 kind of backed off too when it was going, so. Treasuries too, just trading a range here. You probably could have picked a tick out over here. Oh boy, nursing homes will have to accept COVID positive admissions from hospitals according to a new requirement from the Connecticut Department of Public Health. Sounds like a great idea, also commonly known as the Kumo death trap. Says Donald Trump Jr. Yeah, he's right. He's right. What do you do when the entire markets crash soon? Buy more. Got to be careful about what we buy. I kind of feel like though that the market's kind of already crashed. Like, dude, when your stock is down 40%, isn't that kind of a crash? Hey, you know what? If markets really do fall apart here, we will get a bid in treasuries, and we'll probably have some fun with it. For my longer term portfolios, I'm probably not going to touch it. Probably not going to adjust that. My eyes, because I didn't take a shower this morning, my eyes have been watering a ton. Is the Treasury going to take another step here? Well, they're not quite lined up, but the 10-year is threatening it. Wait, did GameStop do something? Hold on. What do we got here? Actually, let's pull it up on TradingView. What's GameStop doing here? Somebody saying it faded. I'll add it as a subchart symbol. GME. Actually, no, I have to make it the main series because otherwise it'll be delayed. Ooh, ouch. Owie. Jeez. Look at GameStop today. Up big overnight, up 10-15% in the overnight. And they just, from the get-go, they just did nothing but sell it. And they're almost back to the previous day's prices. Ugly. Carl Quintilla tweets, the GameStop price fade should serve as a warning. The last 2 years has witnessed a lot of nonsensical behavior. A press release stuffed full of buzzwords and innuendo could rocket prices higher, but that environment no longer exists. Bitcoin pretty much where it was. They just came in and bought the dip. They're watching this stream and they're like, no way, we're gonna let Seth enjoy himself watching Bitcoin collapse. So you never let me have any fun. Well, you know what? I want to go shower. I want to go make this video. So I will see you guys on Monday. Remember, CPI, big deal. Don't miss it. There's still lots of trade ahead of us. So it's only January 7th. We got a whole year. But I will see you guys on Monday. Hopefully I got a video for you then. In the meantime, stay profitable, friends. Oh yeah, and make sure, I'll just leave that comment here. Make sure you visit our video from the week and leave a comment. That really helps the channel out. Okay, now, stay profitable, friends.